G'day guys, welcome back to the Devon Too Good investing channel. In this video today, we're going to be analyzing Corsair Gaming's first quarter 2022 financial results. I'm going to be providing an update on how the company is going and how I expect them to perform in the future. And then once we go through these earnings results and speak about that, I'll then show you my valuation and some price targets going out 5 years into the future. So before we get into it, make sure you like this video and subscribe to my channel. So let's get right into these earnings right here. We can see net revenue for the first quarter of 2022 was $380.7 million, and this represents a 23.4% increase compared to pre-pandemic first quarter of 2020. But this is where it gets concerning, right? A decrease of 28%. Or 28.1% compared to the first quarter of 2021. So honestly, this is pretty disappointing, right? Net revenues compared to Q1 last year went down 28.1%. And in that quarter of last year, in the first quarter of 2021, this included stimulus checks and pent-up demand. Obviously, everyone was locked indoors. Well, a lot of people were locked indoors sort of first quarter of 2021. There was a lot of money, a lot of free money, a lot of government money, a lot of stimulus checks going out to people. And what were they doing? They were stuck inside, they had money, and they went and bought gaming equipment. And some of this gaming equipment is Corsair, as they are one of the leaders in gaming components and up there with some of the leaders in gamer and creator peripherals, which we'll speak about later. So gamer and creator peripherals, it increased 76.8% compared to the pre-pandemic first quarter of 2020. However, it decreased 23.7% compared to the first quarter of 2021. And look, it's the same story as net revenue, where we're seeing a decrease there. Overall, if you consider pre-pandemic, that growth is pretty strong still. And the company have came out and they do expect this to continue to grow at 20 to 25% annually up to 2026. And who knows what it's going to do after that. But yeah, it probably won't stop growing after that. But that's what the company is expecting. That's what they've guided. That's what they talked about during their investor presentation, which came out a few months ago. And they did reiterate in the conference call that that is still their target growth rate for this segment. And if we move on to GAAP operating income, it declined 103.7% to a loss of $2.5 million. And this is compared to net income in the positive of $67.3 million in the first quarter of 2021. And in a sec, I will tell you exactly why this is the case and why it has dropped. And you can see the adjusted operating income, it also declined 83.4% to $13.3 million compared to the first quarter of 2021, where they absolutely ripped it up and they made $80.4 million. And it's the same story here with adjusted EBITDA and earnings per share. They made a bunch of money in Q1 of last year. They lost a little bit of money Q1 this year. Now, why is this? The why is really important. So, Andy Paul, he's the CEO of Corsair Gaming. He owns a fair bit of the stock actually in his own personal wealth, and he has been the CEO of the company since it was founded. So this guy knows the company really well. He's obviously very passionate, and he's been with the company since the very start. And he said that they faced headwinds in Q1. Well, who would have thought? So the first point he brings up is inflation. No one can doubt that inflation has had an impact, and it's definitely had an impact on consumer discretionary spending. As things get more expensive, people's confidence drops, and they're not going to spend money on things that they don't have to have. On top of that, we got the Russia and Ukraine conflict, and this is particularly affecting their European side of their business. In Europe, things aren't as good over there as some other places in the world, and consumer confidence is quite low. What else? High freight costs. That's the third reason he's given here. And this has been consistent for the last year. They did mention that it is starting to sort of normalize and come down. Perhaps we're at the higher end of freight costs, and that trend should start reversing and becoming a tailwind for margins. But pretty much if freight costs is high, that means their expenses go up. It means getting their product around goes up and their margins decrease. And as these freight costs hopefully come down moving forward, this should cause their margins to increase, and we should start seeing positive net income. So hopefully that is the case, as no one really knows when this is going to happen, but honestly it should only be a matter of time. Now, another reason why Corsair has struggled is the price of GPUs. GPUs is the most expensive item in a gaming PC. And when these items are really expensive, people put off buying new PCs. And if they put off buying new PCs, they're obviously going to put off buying gaming components and gaming and creator peripherals. But he did say that these high prices for GPUs is starting to come down as we see the surge from shelter at home and all the pull forward there. It's starting to subside, right? Starting to subside. These GPUs are starting to come into prices where, they're coming back to MSRP. So what he did mention is the surge of activity that we saw during the shelter at home period does not appear to have caused a pull forward in builds, more so an entrance of new gamers building for the first time. We expect that GPU cards will be back to MSRP in the near term, perhaps discounted below MSRP. So because of this, they expect a surge of self-built gaming PC activity in the second half of 2022 and moving forward into 2023. He also sees a similar positive trend with peripherals. While the market appears to be generally down some 20 to 25% compared to last year's peak, it is still substantially above pre-pandemic levels. We think that the peripheral market will continue to drive 20 to 25% annual growth, and this is important when we look at the valuation later. He also says, latest market share data for Q1 from the United States and Europe shows that we are the number one position in every major category of component that we offer. So that is really good. They're also top three in they hold pretty much a number one position in gaming components, and when it comes to gamer and creator peripherals, a top three position pretty much in all their categories that they compete. So if we move down here, this is from Corsair's CFO, Chief Financial Officer, Michael Potter. He says that we expect Q1 2022, we expect it was the peak of pandemic-related high freight costs and promotional headwinds, and we expect gross margins will improve in the second half of the year. And their guidance, net revenue, 1.6 billion to 1.8 billion. This would be a drop in revenue compared to 2021. However, we should expect this. 2021 was a crazy year, and there was a lot of pent-up demand that came through in 2021. Adjusted operating income in the range of 100 million to 120 million. Adjusted EBITDA in the range of 110 million to 130 million. So what do I think about this guidance? Yeah, it's soft guidance. Yeah, it's a pullback from last year, but has the long-term trend of this business, does it still exist? And in my opinion, it looks like it still does. The company's coming out and they're saying, hey, we're the leader in all these categories. We expect 20 to 25% growth in gamer and creator peripherals. Our margins should increase as shipping costs goes down and our products mix moves into that more high margin peripherals away from that lower margin components. This should keep boosting margins over time. So, and if you think about it, look, I don't like adjusted numbers. Charlie Munger, great value investor, he doesn't like adjusted numbers. He calls them bullshit. So you got to be mindful here of these adjusted numbers. But if we do use the adjusted operating income and we assume 100 million, company's trading at 1.5 billion at the moment. That would give a ratio of 15. So for a company that should be growing, double digits over the next 5 years, look, it seems pretty dirt cheap and a fairly reasonable value. So let's jump over now to the valuation and let's talk about it further. So guys, if we have a look at the valuation now, so pretty much I've made a bear case, a base case, and a bull case. One thing to note about these valuations is that they do not take into account share dilution or any cash or debt on the balance sheet. So that's something that's important. That's something you have to keep in mind. But anyway, let's get into it. These are really simple, quick and dirty valuations here. So in the bear case, I'm estimating that they're going to come in this year with revenue in the midpoint of their guidance, so 1.7 billion. And I'm going to assume 10% growth going out to the end of 2026. And if we grow it out at 10%, that gets us at $2.5 billion in revenue. For this bear case, I'm going to assume 7.5% net income margin. And if you look on Ticker, I'll quickly jump to Ticker here. You can see that analysts in 2026 are expecting net income margins of 10.1%. So this is quite a bit below analyst estimates here. But regardless, that's what I'm going with the bear case. This would assume potentially that inflation does not slow, that freight costs does not come down or comes down a little bit, and there's other headwinds that challenge the business here and compress margins, perhaps competition, and then a terminal multiple of 10. This lands us at a market cap of 1.6 billion, and from today's market cap of 1.51 billion, that gives us a CAGR of 5%. So if we look at the base case, I think this one's probably the most likely outcome out of the three here. So again, I've assumed the midpoint of their revenue guidance. And what I've done is I've grown their revenue out by 15%. I think this is a fairly reasonable growth rate for Corsair using this low base of 1.7 billion. I think it is quite likely that they grow 15%. And that gets us a revenue of 3 billion by the end of 2026. So this would be below Corsair's management's long-term guidance of 3.5 billion by 2026. I don't actually think they're going to hit that 3.5 billion. I think they've overestimated a little bit there. But regardless, you'll see it's still a good opportunity. If we assume 8.5% net income margins, a terminal multiple of 15, which is not crazy for something that's growing at 15% a year, that gives us a market cap of $3.8 billion and a annualized growth rate, or pretty much what our annual return would be, 23%. And 23% is quite attractive. Look at the bull case here. I've assumed 20% per year growth, and that would get us to management's guidance. And like I said, I just don't think it's going to happen. I've assumed higher net income margin, 9.5%. I've kept terminal multiple at 15 here. I just wanted to be more conservative as this was already starting to blow out. And if you look here, that gives us a market cap of $5 billion and a CAGR of 31% per year. So, guys, let me know what you think of these. Obviously, they're very basic models. sometimes it's better to be basic than complicated though when it comes to investing. It's almost like a back of the paper sort of valuation here. I do think the bear case is reasonably, well, it's out of the three cases, not financial advice. I think it's the most likely. Perhaps they do a little bit worse. Perhaps they do a little bit better. But regardless, guys, I hope you enjoyed this video. Make sure you like it, and if you made it to the end of this video, you might as well subscribe as well. And I'll keep you updated with Corsair over time. It is a company that I do own some shares in, so yeah, it gives me good incentive to keep pumping out Corsair videos in the future. But guys, thanks for watching, and see you next time.